The mobile payments company Square is expected to price shares for its initial public offering tonight and begin trading tomorrow. Square is one of the so-called unicorns, or private companies valued at $1 billion or more that plan to go public this year. Kayla Tausche takes a look at the challenges Square faces.
It all started with a small plastic square plugged into a smartphone, giving small businesses an affordable way to take credit cards. But now Square, once a small business in its own right, is trying to convince Wall Street it's worth billions of dollars. On the conservative side, $3.5 billion, but that alone is a steep drop from the company's last private market valuation. In an attempt to woo new investors who want more assurance the stock will perform well once it trades publicly. That new reality takes a few things into account. First, volatility in the IPO market. So many of these newly traded stocks are below their offer price. Second, there's the fact that CEO Jack Dorsey also has another day job running Twitter. And number three, there's increasing competition in the payment market. Square charges merchants using this simple payment processor a flat 2.75% fee, but Square's customers are trying to win its business. Smaller rivals are charging merchants less. Bigger rivals are adding data and analytics. So Square branched out too. It now offers marketing and it now offers loans for these merchants to grow, trying to retain these customers as they become bigger. And investors are optimistic that last piece of the puzzle, Square Capital, promises huge growth. But for now, the bulk of Square's revenue, about 95% of it, comes from those core transactions, those credit card swipes. We'll see how Square can do tomorrow with a large transaction of its own. For Nightly Business Report, I'm Kayla Tausche in New York.